All right, I think we've hit critical mass here. So we're going to go ahead and get started. Again, thank you all for taking time out of your day to join us. My name is Lindsay Clark. I am our Chief Borrower Advocate and Director of External Affairs, and really excited to talk to you about your student debt today. So just a quick look at what we're going to cover. I'm first just briefly going to introduce Savi, who we are. I think it's important because there are a lot of actors and companies in this space, and it's important to know who you're trusting and why we are such a trusted resource and advocate for so many borrowers across the country. And then we're going to dive right into the meat of the presentation. And I'm going to sort of walk you through Student Loans 101. January of a new year is a great time to sort of get a refresher on some of the most important things that you should be aware of and understand about your student debt. So we're going to talk through some of those. And then we're going to transition and talk about some of the major student loan policy and program updates that have been going on. Whether you've been paying close attention or not, you shouldn't need to be a student loan expert, but a lot has been going on. So I'm going to try to recap the most important things you should be aware of as a student loan borrower so that you can understand what you might need to take action around and protect yourself as a consumer. And then the last part of the presentation is going to focus on utilizing Savi and the role that Savi can play in helping you sort of on your student debt journey. So we're going to walk you through how to make sure your account is set up, all of the features and resources at your disposal. Before we go any further, just a few housekeeping notes. I want to note that we have a smaller session here today, a little under 20 of you, which is great because it means that hopefully I'm going to be able to answer any and all questions that you might have. So with that being said, I encourage you, as questions come to mind throughout the presentation, please feel free to direct those to the Q&A. I will be pausing periodically and keeping an eye on that, and we'll try to answer as many as I can, if not all, out loud. So just keep that in mind with any of the information that you might be sharing, personal in nature in that Q&A. This session also is being recorded, and you will be able to receive a copy of that recording after the webinar. The email goes out about 24 hours from now. So you'll have a link in which you can always rewatch or revisit any of this presentation. So if you have to step away at any point or you lose track of what's going on, totally understandable. Like I said, everyone will have access to a copy of the recording. So with that being said, just want to first start off with a brief introduction for those of you who might be new to Savi about who we are. So Savi is a social impact technology startup based in Washington, D.C. We were founded by student loan policy experts and advocates who have been fighting on behalf of the borrower for almost a decade. And in 2017, this was the first year that borrowers could start applying to a big forgiveness program called Public Service Loan Forgiveness. We're going to talk about that in more detail here in a second. But all to say that about 100,000 people applied for the program in 2017, and 99% were rejected. And again, I'll talk about the reasons why that happened in a bit here, but all to say that our founders saw this and decided to do something about it. So they developed Savi as a technology platform and a service to help borrowers like you and borrowers like me. I'm a student loan borrower myself. I have a little over $200,000 in student loan debt. So if that makes any of you feel better about your own situations, then mission accomplished right off the bat. But to help borrowers like us not only better understand our student loan debt, but actually navigate successfully from start to finish around some of these very complicated and overwhelming programs, whether it be income-driven repayment or public service loan forgiveness. But along the way, we want to make the experience of being a student loan borrower better because the system is truly broken. And it makes it really difficult to see any light at the end of the tunnel. So our goal is to try to unlock as much additional savings, lowering your monthly payment as much as possible. And then for those that are eligible, making sure that they can cross the finish line around those forgiveness programs. We are a registered public benefit corporation, which means it exists in our mission and charter to serve the public benefit. And that's exactly why we do things like this here today. We host educational webinars and workshops almost on a daily basis for our various communities of borrowers across the country, because we firmly believe that when borrowers are better educated and more informed about their student loan debt, they are more empowered as consumers. So with that being said, let's dive right in. And as I mentioned earlier, when we talked about the agenda, this is going to sort of be a refresher maybe for some of you. Maybe you're going to learn some new things, but I really wanted to sort of start off the new year and make sure everyone was working from the same page as far as the basics about your federal student loan debt. So things like, what are your student loan servicers and what role do they play? What types of federal student loans are there? This one is important as a borrower, something I didn't even realize myself for many years, but the type of federal student loan you have is going to impact your eligibility for certain programs, whether it be repayment or forgiveness. So it's sort of important to understand how that operates. We're going to talk about things like income-driven repayment plans. Those can be a powerful way to lower your monthly payment. Public service loan forgiveness, the biggest forgiveness program out there. And how that can be a powerful way to have the remainder of your loan balance completely forgiven. And then, like I said before, we're going to wrap things up and talk about sort of the recent updates on student loan policy, some of the program changes that have been going on, so you can be aware and understand how this might impact you. And again, any questions that you might have, please feel free to direct those to the Q&A. All right, so let's start off by understanding our federal student loan servicers. So these are companies like you see on your screen here: Great Lakes, Nelnet, Mohila, Aidvantage. Now there are about 9 to 10 servicers total, so not all of them are going to appear on your screen. So if you have one and you don't see it on the screen here, not to worry. But these servicers are companies that are contracted by the Department of Education in the repayment and management of your student loan. So this is the website that you'd log into. You'd be able to see your monthly payment, your statement, set up that auto pay, etc. Now, just to clarify, Savi is not a servicer. So you would never start making monthly payments to Savi on your student loans. You can kind of think of Savi more as a facilitator, or an intermediary or an advocate on your behalf. So we might do things like submit an application to your servicer on your behalf, or we might get on the phone with you and your servicer to resolve an issue. But that relationship between you, the borrower, and your servicer is always going to maintain itself. Now, with that being said, it's really important to know what servicer you have. And you could have multiple servicers. That's totally normal. Where you can find out what your servicer is by going to studentaid.gov. And I will put that in the chat right now. Studentaid.gov is basically the Department of Education's official website where you can log in and see any record of federal student debt that you have received. And it's going to show you right as you log into your federal student aid ID, it's going to show you on that dashboard on the right-hand side, your servicer. So it's a good idea to check this because I know for many of us, our payments have been paused for the last couple of years. And during that pause, some of these servicers have transitioned, meaning they have ended their federal contracts and some servicers have changed. And so I know, myself included, a lot of us maybe haven't been paying close attention to our student loans because of the pause. And so it's just a good idea to make sure you know what your servicer is, because there is a good chance that it could have changed over the last couple of years, and you might not have either noticed or you might have missed that communication. So again, you can check that by going to studentaid.gov, logging into your federal student aid ID account, and that will show you your current servicer. Okay, let's see here. All right, we're going to keep chugging along. All right, next I want to talk about the different types of federal student loans. And again, I can't emphasize enough how important this is, this sort of concept, because I know it was sort of foreign to me, like I said, as a borrower before I became a student loan expert, that the type of federal student loan you had is going to impact your eligibility for certain programs. I just thought there was a federal student loan and then maybe you had a private student loan, right? But really in the green here are the 3 major types of federal student loans. And I'm going to sort of walk you through these, and it's going to be important for you to understand exactly what loan type you have. So let's start off with direct federal loans. So this is the loan program that began around 2010. So if you have a loan that was dispersed from 2010 to present day, there's a very good chance it is already a direct loan. The easiest way to tell if it's a direct loan is it will literally say the word direct in that loan title. It could be direct subsidized, direct unsubsidized, direct consolidation. Those are all direct loans, or it might say DL, which stands for direct loan. Okay. Now, the great thing about direct loans is that they are pretty much eligible for all of the repayment and forgiveness programs we're going to talk about here today, including things like income-driven repayment and public service loan forgiveness. So if you have a direct loan, you're pretty much good to go. Now let's talk about FFEL loans, or FFEL loans, which stands for Federal Family Education Loans. This was simply the loan program in existence prior to direct loans. So if you have a loan from 2010 or beforehand, there's a very good chance it could be a FFEL loan. All right. It could be a FFEL subsidized, a FFEL unsubsidized, or even a FFEL consolidation loan. Those are all considered FFEL loans. The easiest way to tell is it will literally say FFEL or FFELP. That P just stands for program, but that would be a FFEL loan. Now, here's the thing about these FFEL loans. They require a corrective action called consolidation in order to become eligible for programs like public service loan forgiveness and other types of income-driven repayment plans. As a FFEL loan in their current state, they're only eligible for one type of income-driven repayment called income-based repayment, or IBR, okay? So again, if you have a FFEL loan, this would be a loan pre-2010, you would need to consolidate that loan into a direct loan, and consolidation being a free federal process. And you can complete this again at studentaid.gov, or Savi can help you, and I'll show you that a little bit later on, by which you are basically correcting that loan type, creating a new direct consolidation loan, and that loan type will become eligible for all of the different types of repayment and forgiveness programs out there. All right, so it's important to know if you have one of those FFEL loans that you're going to need to consolidate it in order to be eligible for things like forgiveness. The last type of loan program I want to talk about are PLUS loans. And PLUS loans come in two varieties, Parent PLUS loan and Grad PLUS loan. So let's start with Parent PLUS loans. Many people think that the student debt crisis is a young person's problem or a millennial issue, when in fact the fastest growing demographic of student loan borrowers is actually 50 plus, and it's parents taking out loans for their kids. And that's exactly what a Parent PLUS loan is. It's a loan taken out by a parent on behalf of a child, but in the parent's name. Now, this loan cannot be transferred to the child. It is in that parent's name, okay? Now, Parent PLUS loans, like FFEL loans that we just talked about, require the corrective action of consolidation in order to become eligible for programs like income-driven repayment and public service loan forgiveness. So if you have a Parent PLUS loan and you have not consolidated that loan, I highly encourage you to do so, because that's going to allow you to become eligible for these programs. So another type of PLUS loan are Grad PLUS loans. And as the name might imply, these are loans given to graduate or professional students, okay? Now, the great thing about Grad PLUS loans is that they are eligible as is. They do not require any corrective action like consolidation in order to be eligible for programs like public service loan forgiveness or income-driven repayment, okay? So if you are already a little overwhelmed and confused, and there are a lot of acronyms, that are appearing on the screen, that's totally normal. And it just goes to show you the sort of complications and technicalities around some of these different federal loan types. But the reason it's so important to understand, again, is because it's going to impact your eligibility for certain programs. And so if you do have a loan type that requires corrective action like consolidation, you're going to want to take that as early on as possible. Now, I'm going to show you a little bit later on in the presentation when I talk about Savi, how our tool can help you to sync your student loans and identify your loan type for you. So if you're sitting here not sure what loan type you have, not to worry. That's what our tool is designed to do. And if you have a loan type that requires a corrective action, like a FFEL loan or a Parent PLUS loan, we will flag that for you and assist you in taking that action. All right, so that's sort of a summary of the different federal student loan types. I just want to take a second to talk about private loans on the right-hand side here in gray. So obviously, private loans are non-federal loans, okay? So they are issued by a commercial lender, such as a bank, credit union, maybe a state agency, maybe even your school or university, okay? Now, unfortunately, private loans are not eligible for any forgiveness, repayment, or sort of federal relief programs out there. And there's no way to turn a private loan into a federal loan. You can only go the other direction. You can turn a federal loan into a private loan by doing something called refinancing that loan through a company like SoFi or something like that. But if you have a private loan, it is private forever. And because of the fact that it is not under the federal system and therefore not eligible for any of the repayment or forgiveness programs out there, the best advice I have for someone with private loans who might be struggling and who's interested to see what options they have as far as repayment goes is to reach out to your individual lender. Again, because there's sort of no federal system by which all of these lenders have to abide, each of them has their own sort of rules and repayment plans, et cetera. So they're going to differ from lender to lender. So the best way to figure out what your options might be is by contacting that lender directly. Okay. And again, this is something that Savi, it might be able to help you with as well. Okay. Let's see here. I see a few questions that I want to just take a quick peek at before we proceed. Let's see. So Barbara asks, I have a loan which I believe is a private loan or fell through American Education Success. Would I be able to consolidate it into a direct loan so my loans can be forgiven? So this is a great question. So if it is a private loan, then no, that's not going to be eligible for any forgiveness. But if it is a FFEL loan, then it can be consolidated, and yes, it can become eligible for forgiveness. So again, you can see what loan type you have by syncing that loan through the Savi tool. Or Barbara, you can go to studentaid.gov, which I put in the chat, and this goes for anyone out there, logging into your federal student aid ID account. This is the account you would have created when you took out that debt to begin with. And that, in addition to showing you what servicer you have, will also show you any federal student loans that you have. So if you log into that, or you're not even able to create that account, that's a good indication it might be private, because that account is only going to show federal debt. Okay. So for example, someone like me, I have a combination of both federal and private loans. When I log into studentaid.gov, it's only showing me my federal loans, okay, because that's what it has record of through the federal government. So that's a way you can check if they are federal, if they appear there, and what type of loan they are. And then you can take that corrective action of consolidation. Okay, someone asked, are handouts available? So we have a help center, which I will show you how to access that in at the end of the presentation, that has all of this information in really helpful articles that you can print and download. After this webinar, you'll receive a copy of the recording. We don't share the slides just because they contain some information that is constantly changing around policy and things like that. So we want to make sure that what's out there in the ether and what borrowers have is going to be the most up-to-date information. So we just share the recording. Okay, let's see. Someone submitted a very long question, so I'm going to try my best, Sharon, to get to that, I promise, before the end of the session. And same goes to Amy and to Cheryl. I see one question related to loan type here at the end. Someone asked, I have FFEL loans, or they say, have FFEL loans been eligible for the payment pause? I have FFEL loans subsidized and unsubsidized and was under the impression I wasn't eligible for the government payment pause under the pandemic. So this is a great question. So FFEL loans actually can come in two varieties. There's what's called federally held FFEL loans, meaning they were issued by the Department of Education. Okay, so the Department of Ed is your lender. And then there are a little bit of older type of FFEL loans called commercially held FFEL loans. And this means that they are still federal loans, but they were owned by a commercial or third-party lender, most commonly, your university or state agency. Again, they're still federal, but they're commercially held. Now, there are about 6 million of these loans out there, and these commercially held FFEL loans were not eligible for the pandemic relief, including the pause on payments and interest. The way you'd know if you had a commercially held FFEL loan was that your payments wouldn't have been automatically paused back in March of 2020 when that payment pause went into effect. Okay, because that payment pause was enacted automatically. Everyone who had eligible loan types, and the eligible loan types included all federally held loans, they were automatically paused. So the only ones that weren't were these commercially held FFEL loans, okay? Now, if you were to consolidate that commercially held FFEL loan into a direct loan, it would become eligible for the payment pause, which is still in effect and is likely going to continue into, let's say, August or September of next year. I'm going to talk about that payment pause in more detail here in a second. All right, so hopefully that was helpful. All right, last question, then we're going to keep going on. Someone asked, my loan owner is Navient. Does that mean my loans are private? So this is a good question. When we talk about loan type and servicers, when you are trying to understand what type of loan you have, your servicer is sort of irrelevant, okay? Meaning the servicer Navient, you could have actually a private loan with them. You could have a FFEL loan. You could have a direct loan. So they are servicing a broad variety of loans. So I wouldn't go by your servicer, okay? So, you could have, Mohila, Nelnet, Navient, whatever. It's going to be based on the loan type itself, okay? Now, when it comes to Navient, Navient was one of these servicers over the last couple of years that actually ended their federal contract, meaning all federally held loans that were with Navient were actually transferred to Aidvantage. So if you still have loans with Navient at this point in time, that would probably be a good indication that they are either private or they are commercially held FFEL loans, okay? Meaning they're not federally held, they're owned by a different entity, all right? Because all federally held loans were transferred to Aidvantage, okay? Again, it's you'd have to check with on your Navient account, and when you sync your loans with Savi, we can help identify this. But it could be, either private or it could be a commercially held FFEL loan. And there's a big difference between the two, right? Because one's federal and one is private. So your options are really going to differ there. Okay, so Scott says his loan is with Navient and it's a FFEL loan. So it means it's a commercially held FFEL loan. So if you consolidate that loan, it's going to become eligible for the payment pause. And it is a federal loan. So it'd be eligible for the remainder of sort of, repayment and forgiveness programs. Okay, last question. And there's no distinction between FFELP and FFEL. That P just simply stands for program. So Federal Family Education Loan Program, Federal Family Education Loan, it's all the same thing. So you don't have to worry about any distinction there. All right, last question really quickly here. Someone asks, once consolidated, does that wipe out the subsidized, unsubsidized conditions of the loans consolidated? So when you consolidate your loans through the Department of Education, and if you consolidate multiple loans, the interest rate becomes a weighted average, okay, of all your loans. And let's say you have both subsidized and unsubsidized loans. All of your subsidized loans will be consolidated together, and all of your unsubsidized loans will be consolidated together. So what you would have at the end of the day would be a direct consolidation unsubsidized and a direct consolidation subsidized. Okay. Now, if you have just subsidized loans, then you'll consolidate into one, direct consolidation subsidized, right? So, you could, after a consolidation, have two loans, right? If you had a combination of both unsubsidized and subsidized. Okay, we're going to keep chugging along because we have a lot to get through here, but these are great questions. So keep them coming. All right, so I wanted to talk briefly about income-driven repayment plans, because these are sort of a powerful way to, for many people, lower your monthly payment and maintain your eligibility for certain programs like public service loan forgiveness. So there are two basic ways to repay your student loans. There's what's called the standard plan, and then there are what are called income-driven repayment plans. So the standard plan is what everyone's put on automatically when you graduate. And that basically calculates that you're going to pay off that student loan debt in 10 years, and it calculates your monthly payment accordingly. So for someone like me, I'll use myself as an example, with a little over $200,000 in student loan debt on a standard plan, that's going to come out to around $2,000 a month or so. It's absurd, right? Because again, it's based purely on your debt amount and paying that off on a 10-year horizon. And so the Department of Education realized many people could not afford to make their monthly payments on a standard plan. So they introduced what are called income-driven repayment plans, or IDR. And instead of basing your monthly payment on your debt amount, okay, These plans base your monthly payment on your income, and they also factor in things like your tax filing status, your family size, et cetera. So you could have $500,000 in student loan debt. It wouldn't matter. If you're making less than $10,000 a year, let's say, you're going to be eligible to pay as little as $0 a month on an income-driven repayment plan. And after 20 to 25 years on that plan, you will be eligible to have your debt forgiven. So here's essentially how these income-driven repayment plans work. They basically cap your monthly payment at anywhere between 10 to 20% of your discretionary income, which is sort of a fancy way of saying your adjusted gross income, or AGI. So this is going to be before taxes. So I'll give you an example here. Let's say you're single with no dependents and an income of around $52,000 a year. That monthly payment is going to come out to around $270 a month. And it's pretty much sort of a sliding scale from there, right? So let's say your income was lower than that, right? Your monthly payment is going to be lower than that. If your income was higher, it's going to be higher. We work with borrowers, some surgeons at hospitals who have an income of over $400,000, $500,000 a year, who are still eligible for an income-driven repayment plan. Yes, it's going to be higher, right, than $270 a month because it's based on their income, but they're still eligible. Okay. Now, for every child dependent that you have, that's going to lower that monthly payment by about $50 per child, even unborn child dependents. Okay. Another thing to keep in mind is that it factors in your tax filing status. So if you are single, it's just going to be looking at your single income. Okay. Now, let's say you are married filing jointly, it is going to look at your joint income. Okay. And I know for many people, they're like, well, I mean, this is my debt, not my spouse's, they have nothing to do with it. And sometimes that joint income is a lot higher than what it would be if it was just looking at your single income. And so if you are married filing separately, okay, they look at just your single income. So just want to put that out there. I'm not a tax expert, and, I highly encourage you to consult a tax expert if you are interested to see sort of what the pros and cons of filing, jointly versus separately are. But we've had many borrowers who have looked into that and decided to file separately because of the fact that on an income-driven repayment plan, it would just be looking at their individual income, and that would guarantee them a much lower monthly payment. Okay. Now, there are 4 primary types of income-driven repayment plans. These acronyms you see here: repay, pay, IBR, ICR. So income-driven, or IDR, is sort of the umbrella term here. And then all those different types are simply different types of income-driven repayment plans. I'm not going to go into sort of the nitty-gritty details on the differences. Things factor in like your disbursement date, your loan type, et cetera. This is exactly what the Savi tool was designed to help identify sort of what your best options would be based on your personal information. But it's just sort of helpful to know that there are different types of income-driven repayment plans. Now, here's how the process of sort of applying works. There's an application, and with that application, you must provide supporting documentation attesting to your income. Now, this can come in either the form of your most recent tax return or a pay stub from the last 90 days. Now, if you are unemployed, you are not required to attach any supporting documentation at all. Now, this gets submitted to your servicer. Your servicer reviews and says, okay, Lindsay, you're going to be paying $270 a month on the repay plan. And it locks that in for 12 months. 12 months comes and goes, and you have what's called a recertification deadline. And by that deadline, you basically must resubmit a new income-driven application with updated income documentation. And they do that process again. They sort of calculate, okay, if your income went up, right, your monthly payment could go up slightly. If it went down, same thing goes, your monthly payment would go down, and it locks that in for 12 months. Okay. Now, it's important to make sure that you are resubmitting that application by that recertification deadline, because if you don't, you immediately fall out of the program. So your next month payment would go right back up to that standard plan amount, which for many people, myself included, is going to be a lot higher. Also, any interest that you might have accumulated over the course of that year is going to be capitalized and tacked onto that principal balance. All right. Now, because of the payment pause that's been in effect since March of 2020, pretty much everyone's recertification deadline has been indefinitely postponed. Okay. So no one will have missed their recertification deadline, since this payment pause. And if you're curious sort of when yours might be, it's best to reach out to your servicer. It might even show it on your servicer website, but they've pretty much sort of, suspended that and extended it indefinitely. And really, it's not going to be until payments resume that I think they're going to start sort of reinstituting those deadlines. Okay, so just sort of important to be aware of how that works. All right, let's see here. Someone asked, when do I have to send the yearly income recertification for IDR plan? So it's going to be different for everyone. But like I said, because of this payment pause, they've pretty much sort of extended this indefinitely. So your servicer would be the best one to contact to figure out, sort of what date they have in the system for you. Because again, those dates, predate March 2020. And so, like I said, it's going to be different for everyone. Okay, we're going to keep chugging along here. I just want to talk a bit about public service loan forgiveness before we talk about some of the major policy updates that are going on. Okay, so public service loan forgiveness, or PSLF, is one of the biggest forgiveness programs out there. It has been in effect since October of 2007. That's when it was put into law. All right. And essentially, it is full forgiveness on the remainder of your loan balance, whatever that may be. It could be $500,000. It could be $5,000. It doesn't matter. Tax-free, so there are no federal tax implications here, after you have made 120 qualifying payments. Now, if you could see me on screen right now, you'd see that I'm saying qualifying payments in major air quotes here, because the devil is really in the details as to what constitutes a qualifying payment. And it really comes down to three things, these three things that you see on your screen right here. And I'm going to walk you through those in just a second. But first, I just want to clear up some common misconceptions about these 120 qualifying payments. First of all, they do not need to be consecutive. You just need to reach 120 total cumulative qualifying payments. So let's say you worked for 2 years for a qualifying public service employer, accumulated 24 qualifying payment credits, right? And then you left and went to work in the private sector or took some time off. Nothing would happen to those credits. They'd simply pause. And if you were to ever resume your eligibility, you'd be able to resume accumulating those credits. Okay, so you just need to reach 120 total. However, you can only accumulate one qualifying payment credit per one payment per one calendar month. Okay, meaning you can't double up on payments and get double the amount of credits in a given month, or you can't make a huge lump sum payment and get more credits than you normally would. You can kind of think about it like this. In any given calendar year of 12 months, the maximum amount of PSLF qualifying payment credits that you can receive is 12. Okay, so if you have to get to 120 total, right, you can only get 12 a year. The minimum amount of time before you'd be able to receive forgiveness under this program is 10 years, okay? And that's if you were making those payments and accumulating those credits consecutively, which again, you don't have to. So I emphasize this because many people often refer to this program as a 10-year program, but I kind of think that that's a little misleading because it could very well take you longer to achieve forgiveness under public service loan forgiveness. And it's really, I find it easier and more realistic to think about it in terms of these 120 credits and how close you are to that. I've got 80 credits, I've got 100, et cetera, when it comes to achieving forgiveness. Because there are many situations where, you could have been working for a qualifying public service employer for 10 or more years. But if you haven't, been making payments on those loans, you're not accumulating any credits towards forgiveness. So you're not any closer towards achieving PSLF. So it's not simply based on, your time in service. Okay. All right. Hopefully that clears up some common sort of confusions and misconceptions. Now, what constitutes a qualifying payment really comes down to these three things. Number one, you have to work for a qualifying employer. A qualifying employer is any government organization at any level, federal, state, local, or tribal, or any non-for-profit 501c3. Now, I'm going to show you in a bit here how the Savi tool has a built-in employer database of all of the public service loan forgiveness, as well as teacher loan forgiveness eligible employers in the country. And you'll be able to sort of type in your employer name. If it's eligible, it'll pop down on this sort of drop-down menu. You'll be able to select it. and you'll be able to add as many previous and current employers as you need to. The only stipulation around your employment is that you must work a minimum of 30 hours or more a week, okay? Now, let's say you work part-time at one qualifying employer, like a hospital, and maybe part-time at another qualifying employer, whatever it may be, could also be a hospital. So long as combined, you're working 30 hours or more a week, and any and all employers are qualifying, you can still qualify for public service loan forgiveness. So you don't just need to work, full time at one employer in order to qualify for this program. You can combine part-time employment, but again, it has to be a minimum of 30 hours or more a week, and all of the employers must be qualifying. All right, so that's number one, qualifying employer. Number two, while you are working for that qualifying employer, you must have a qualifying loan type. And the only loan type that qualifies is a direct federal loan. This is what we talked about earlier when we were discussing the different loan types. Now, let's say you have a non-direct loan, like a FEL loan or a Parent Plus loan. You need to consolidate that loan into a direct loan in order to make that loan type eligible, okay? Now, there have been some improvements to the public service loan forgiveness program over the last year or so, which have made it so that they are going to be able to give you qualifying payment credits for periods prior to that consolidation. However, you still need to consolidate that loan type, okay? So I highly encourage anyone who's interested in pursuing this program, if you have a non-direct loan, like a FEL loan or a Parent Plus loan, to consolidate that loan, okay? All right, last but not least, all right, you need to be repaying that loan on a qualifying repayment plan. And the only repayment plans that are qualifying are income-driven repayment plans. Now, again, over the last year or so, they've made some improvements and are retroactively giving credit for payments made that might not have been on an income-driven repayment plan. But going forward, you will need to be on an income-driven repayment plan to qualify and receive sort of that qualifying payment credit. So you essentially need to satisfy all three of these things simultaneously: working for a qualifying employer, have a direct loan, and be repaying that loan on an income-driven repayment plan. Now, I'm going to talk to you all in a few minutes here about how this payment pause period under this pandemic relief is treated differently, okay? And how for those that have been working for a qualifying employer and taking advantage of this payment pause, you actually are able to receive credits for each one of those months that payments have been paused without making a payment. All right, so stay tuned. I'll get into more detail about that in a second here. Okay, a few questions that I see came through before we proceed. So someone asks, I've known 501c3s as nonprofits. Are not-for-profit companies also the same thing? Yes, they're the same thing. As long as they are a 501c3, okay? Some will call it not-for-profit, some call it non, but the nonprofit has to be a 501c3. All right, someone asks, under PSLF, what if you worked for a qualifying employer then retired? So unfortunately, this goes out to Sharon and anyone else, unless you submitted your a PSLF application before the October 31st, 2022 PSLF waiver deadline. Okay, there was something in effect called the PSLF limited waiver, which basically expanded eligibility requirements to include retirees. Unless you submitted an application before then, unfortunately, as of right now, you are not eligible to basically go back and take advantage of the program unless you were to go back to work and work for a qualifying employer now. So Sharon, if you have any follow-up questions about that, I'm happy to answer those. Okay, someone else asks, can payments be doubled up or more in months up to the maximum 12 payments for a year? So if in a certification cycle of $200 per month and a debt holder takes another job with a higher salary, could those 12 payments for the year be made earlier and then not make payments after the 12 are made? Okay, I'm trying to make sure I understand this. So you actually, Cheryl, you can make a lump sum payment as long as it is equivalent to what those 12 months would be on an income-driven repayment plan. You can make that lump sum payment and have those credits counted for that the upcoming 12 months. Assuming, I think that's what you're trying to have happen to avoid that. Now, I will also tell you this, Cheryl. let's say, you have taken a job with a higher salary. You can, and payments are paused right now, but let's say, before payments, resume, and I would actually, you should do it right now. You can, if you're going to use, let's say, last year's tax returns, right, instead of this year's, maybe where you've got the higher salary, if you submit your income-driven repayment application, right, using your last job stuff, and you lock in that payment will be locked in for 12 months, but that 12 months will not start until payments resume. So payments are going to continue to be paused. I'm going to talk about this in a second, likely until August or September, maybe even longer, okay, next into this year. And so your 12 months on that lower payment wouldn't start until, let's say, September or October of this year, okay? And that's when it would begin. So, you can decide to do either, but I would definitely, you might be able to lock it in for an even longer time for the next, year and a half, 2 years, really, under this payment pause, using that lower income, if you were to submit that income-driven repayment application. All right, so hopefully that makes sense. All right, someone else asks, my understanding was the consolidation deadline has passed for receiving credits for time worked at a qualifying employer. Is that no longer correct? So that was just basically for a certain loan type, but they basically have extended this PSLF limited waiver without really extending it. And there's going to be upcoming, and we're going to be sending out more information about this. They're putting into effect sort of this May 1st deadline of this year for consolidation, in which you can still retroactively receive credit. So if you haven't done so yet, you've still got time, and I highly encourage you to do so as soon as possible. Someone else asked, for PSLF, can I still send the employer verifications by mail? Yes, you can. Every PSLF form is going to go to Mohila Servicing. That is the servicer that manages this program. And those can be sent via mail, snail mail, or fax. Or if you're working through Savi and you have that Savi Essential Plan, we submit those digitally for you. Okay. All right. We're going to keep chugging along here. These are great questions. And keep them coming. Okay, so I want to sort of transition and talk about some of the major sort of student loan policy changes and updates to programs that have been happening over the last year, really couple of years. And I will say this, all very positive. I've never been more optimistic about where we are headed as a student loan borrower myself, but also as someone who follows and works closely with policymakers around some of these programs. So first, I want to talk to everyone about President Biden's student loan debt relief plan. So just to back up and give some context here, this was announced back in August of last year. And there are sort of a couple different points of this plan, but really what made the most news across the world, really, and I'm sure most of you have heard about at this point, was this idea that eligible borrowers would be able to have anywhere between $10,000 to $20,000 of their federal student loan debt basically discharged or canceled under this relief plan. Now, I want to make sure to clarify that this debt relief plan, okay, so the cancellation of $10,000 or $20,000 in student loan debt, is different than public service loan forgiveness. Okay, I found that the most common question I've been getting on webinars these days, and or sort of common confusion, is sort of thinking that those two are the same. The public service loan forgiveness program began in 2007. It was written into law. It's not going anywhere. In fact, it's only getting better and more inclusive. And so that is very different than what I'm talking about here, which is President Biden's sort of debt relief plan. Okay, and again, that's sort of this idea of this $10,000 to $20,000 in cancellation. So I use cancellation when I talk about this debt relief plan because that's basically what it would be doing. Let's say you were eligible for the $10,000 and you had $100,000 in student loan debt. It's going to cancel $10,000 from that balance, and now you have $90,000. Okay. And that's different from public service loan forgiveness, where the remainder of your loan balance is going to be forgiven after you've reached those qualifications. Now, this program was announced in August. They sort of opened up the application portal in October of last year. And then as of November 11th of last year, they basically had to close that portal and stop accepting applications. because of current litigation. All right. So because of these lawsuits, they are basically prevented from implementing this program. The White House and Department of Justice have appealed these lawsuits and are currently, or I should say, we are currently waiting on oral arguments to begin at the Supreme Court, which will start at the end of February. And so that's going to be sort of the final determination on the legality of implementing this program. So as of right now, it is on hold. If you already applied, there's no need to reapply, let's say, should this become implemented. And in fact, you actually might have received an email sort of around Thanksgiving time that said, subject update on student loan debt relief and the status of your application. And it basically sort of indicated that you had been pre-approved and that the program was on hold. And if it should, be sort of cleared as legal, that you will have that amount of debt canceled from your balance. Okay. Now, if you weren't able to submit that application before the portal was sort of paused, no need to worry. If the program is deemed legal, they'll open that back up and you'll be able to apply. It was a very quick application, I would say under 30 seconds, 6 questions. I mean, boom, you just press click online and you're done. But again, right now, this plan is currently being blocked. We will not know more, at least until, I would say February, March, April of next year. Okay. Now, this relates to this next sort of point here, which is the latest extension of the payment pause. So, just to back up and give some context here, back in March of 2020, when the CARES Act went into effect, right at the height of the pandemic, payments were paused and interest was waived on the majority of federal student loans out there, okay, excluding any private loans and any commercially held FFEL loans, right, as we talked about earlier. Now, this payment pause has since been extended 6 or 7 times, okay, and usually it was extended to, a certain deadline or date. The originally was sort of the end of last year, December 31st. Well, they recently extended this again, but there's sort of some stipulations around this extension. So payments are going to continue to be paused until the Department of Education is permitted to implement the debt relief program that I just talked about above. All right, so that's Biden's 10 to 20K in cancellation, or the litigation is resolved. Okay, if either event should take place, payments will restart 60 days later. Okay, so let's say, that the Supreme Court, hears these arguments, they decide this is legal and can proceed, sometime in, let's say, March or April, whatever date, that they're permitted to start implementing that program, payments would start 60 days after that. Or it could go the other way. They say it's not legal, this program is not permitted, so the litigation is resolved, 60 days after that, payments would start. However, let's say that the debt relief program has not been implemented and the litigation has not been resolved by June 30th of this year, 2023. Okay, so that's sort of their drop dead date. Then payments will resume 60 days after that. So under those conditions, all right, payments would not technically resume before September 1st of this year. Okay. Now, either way, borrowers are going to be notified by the Department of Education before payments restart. If you have a Savi account, we're going to be keeping you updated as sort of the situation progresses. But as of right now, the payment pause is going to continue. Okay. All right. Now, one of the things, and I had mentioned this a few minutes ago when talking about public service loan forgiveness, and I really want to make sure that everyone sort of who is pursuing public service loan forgiveness is aware of, because it presents such a huge opportunity, is the fact that the time during this payment pause, so, from March of 2020 through what could be, let's say, August 31st, September 1st of this year, right? For each one of those months that payments is paused, if you've been working for a qualifying public service employer, you are able to, accumulate a PSLF qualifying payment credit for that month without having to make a payment at all. So what this means is that for eligible borrowers, you're going to have the potential to receive, 40 plus of these PSLF credits for free towards the 120 total that you ultimately need to achieve forgiveness on the remainder of your loan balance. So that's basically putting you almost a third of the way closer towards full forgiveness without having to pay a dime. And this is significant because normally under the program, right, you need to be making a payment in order to receive one of these qualifying payment credits. But under this payment pause, you don't need to. And so, again, you could be a significant way closer towards full forgiveness without having to have made a payment at all. Now, the way that you sort of claim these credits is the same way you claim any credits with public service loan forgiveness, and that's by submitting that PSLF employment certification form. Some people call it the PSLF form, the PSLF application. It's all one and the same. It's the one and only form for the program, and that needs to get signed off by your HR or employer at any current or previous employment you might have had, and then submitted to Mohila Servicing. All right, moving on. Last thing I just wanted to talk about, and I mentioned this when we discussed, federal servicers, but over the last couple of years, 3 of the biggest federal servicers out there ended their federal contracts. And what that meant for about 16 million student loan borrowers is that they were basically transferred to new or other servicers for management. And so again, it's really important to be aware of what servicer you have, because yours likely could have changed during this payment pause. And because you might not have been paying as close attention to your student loans, I certainly know I haven't, as you normally would have when payments are going on, this could have changed without you knowing it. So again, you can find out where your current servicer, what your current servicer is by logging into studentaid.gov, logging into your federal student aid ID account, and that will show you what your servicer is. And then I highly recommend, for those of you who haven't done so already, making sure that your contact information in your profile on your loan servicer's website is fully updated. That's how they are going to be communicating with you about a lot of these important changes, when payments are going to resume, your income-driven repayment applications, et cetera. So it's important for you to be aware of that. All right, last but not least, and I'm just sort of going to preview this here briefly. We've got some really positive changes that have been announced but have not been implemented. So that includes a new type of income-driven repayment plan. This new type of income-driven repayment plan would lower that threshold and cap your monthly payments at 5% of your income instead of the normal 10 to 20. So that's going to lower payments across the board. It's also going to subsidize any future interest, et cetera. So that's going to be a powerful one. Stay tuned. It's been announced, but again, it has not been sort of put into the regulations and law. So it's not available for you to apply for yet. But as soon as it does become available, we will certainly communicate that to you. And again, there are sort of some long-term improvements to the long-term improvements to the PSLF program that are coming about in the next couple of months and year that are going to expand, the type of eligible employment, what you're able to get credit for. They're going to start giving credit for periods of deferment and forbearance. So periods when you might not have been making a student loan payment. So again, these have sort of all been announced, but not been formalized. And we will communicate those to you, when they do. Okay. Let's see, before I sort of transition here, I know we've got about 5 or so minutes left, and I want to make sure that everyone's sort of aware of how to take advantage of their Savi account and to utilize that in helping you through what I know is a lot of information and a complicated process. Let me see here, a few questions. Someone asks, it sounds like I have commercially held loans that are not yet consolidated. If I now consolidate them, would I be eligible to receive PSLF credits for time worked at a 501c3, even if my loans were on pause at the time? Yes, you would. Absolutely you would, but you need to consolidate. But that's the good news. You absolutely would. Someone asked, what is the current salary cap to be able to be eligible to participate in the PSLF IDR programs? There is no salary cap. And I'll just to differentiate, PSLF, again, we've got surgeons who, have $400,000 in student loan debt and might be making $400,000 a year and are eligible for public service loan forgiveness. There is no income limit or salary cap when it comes to eligibility for that program. Someone asked, how does that apply to those who haven't consolidated yet if they consolidate and then apply for PSLF? So you need to consolidate, and then they will basically retroactively go back and look at your period of employment and then be able to award you those credits. Okay. The consolidation is sort of a technicality that you just need to take care of in order for them to be able to do that. All right. How do I find out whether my loan is private or not? So again, you can go to studentaid.gov, log into your federal student aid ID account. You will see a record of any federal student loan debt there. The only place that private loans are going to show up is on your credit report. So you could take a look at that. And if you see loans there that are not appearing on your federal student aid account, that would indicate that they are private. Okay, let's see. I'm going to keep going along here, and I will try to get back to any other questions that I wasn't able to answer before the end of the presentation. All right, so how can Savi help you with this? Well, we're going to ask you some basic questions around, your tax filing status, your income, your employment. All of this is going to help us identify the optimal repayment and forgiveness plan for you. So that's going to be basically down to the cent as to what exactly you'd be eligible for, how long until you'd be eligible for forgiveness, et cetera. We are also going to monitor for new programs and policy changes. And as these things come into law and are being implemented, our tool and services are going to be updated accordingly. So you're going to be able to take advantage of the latest programs and savings options. And then we offer sort of a premium level of service in which we basically take on all of the administrative burden for you. And that includes basically all of the paperwork and applications around things like your income-driven repayment plan, public service loan forgiveness. We basically do that for you. We pre-fill and digitize these forms, send them off to your various employers and HR for signature, and submit them on your behalf. And this ensures that they get there quickly, accurately, and efficiently. We have a 99% acceptance rate on our applications. And then we help to monitor those with you to ensure they achieve the desired outcome. For those of you who might not be as familiar with public service loan forgiveness, submitting the application is often the easy part. It's really what happens afterwards. Right now, because of what's been going on, we're seeing about a 12-week processing wait time for these applications. And the communication between MOHELA and a borrower is very, very weak. That would be describing it nicely. And so there's a lot of room for confusion. There's a lot of room for service or error. And so we play the role of making sure that you get the credits that you deserve. They've counted them properly. I can't tell you, I would say about 50% of the time we see errors in how these servicers are calculating these to make sure that you are crossing that finish line as soon as possible. And then last but not least, with that with that premium service, you're able to receive personalized support from our student loan experts. So whether that's via email or telephone, this is sort of a dedicated agent who's going to be able to work with you along all of these this cadence of touch points. Because unfortunately, it's not just an easy beginning, middle, and end, here as far as your student loan journey. It really is a cadence of touch points along, weeks, months, sometimes years to reach the finish line. And that's where we are here to help you every step of the way. So just really quickly here, I'm going to take you through a few of the screens. I know we're running right up on time, so I apologize. But to get started, if you hadn't done so already, when you registered for this webinar and you opted for us to sort of get that account started on your behalf, you should have received an email earlier today in your inbox, and that will provide you with a link to get your account started. Otherwise, you can always go to the link you see on your screen here, app.bysavi.com/account/login. You'll be able to either log back into your account or register. And I'm going to go through this quickly, just as a fair warning here, just to provide you with a bit of color as far as what it's like working around your Savi account. But when you log in, the first thing you're going to see is your Savi dashboard. And this is sort of like mission control for everything Savi. It's where you're going to be able to do a lot of different things, including register for any number of our live and interactive workshops. So again, as I mentioned, we host these, on a daily and weekly basis. Some are topic oriented, like we do one just on consolidation, one just on Parent Plus loans. So you can see the full lineup of events and register from your dashboard. You can also invite friends and family to benefit from Savi as well. You can simply enter in their email address and they will receive an email invitation to join and get started. And it's also where you can select your Savi plan. So as I mentioned, anyone can create their Savi account for free. We offer a paid premium service by which we sort of take on that administrative burden for you. You have access to personalized support from our student loan experts one-on-one, and you can select that plan, sort of upgrade and downgrade at any point in time from that dashboard. And then when you're ready to get started, it's pretty simple. We're going to ask you some basic questions around your family size, your income, your employment. All of this is to help us identify, like I said, that optimal repayment and forgiveness plan for you. The last step in sort of the Savi process is syncing your loans. We provide a loan sync through a technology called Plaid. If you have a Venmo account, you've used Plaid before. It's sort of a best-in-class syncing technology. It basically allows you to select your servicer. So let's say Navient in this case, enter in your Navient username and password credentials, and it's going to sync over a read-only snapshot of that data. So it's not giving us access or anything like that. It's simply a snapshot of those important data points we need to know, like your loan type, your balance, your interest rate, so that we can really fine-tune that estimate for you at the end. And then once you've done that, you'll reach your plan options page. And this is basically going to show you what your best options are. We'll show you things like what that new monthly payment could be on an income-driven repayment plan, what that total payment over time would look like, how long, down to the year and month until you'd be eligible for forgiveness, and exactly what that forgiveness might be. You can expand below for more details. If there are a couple different types of plans available and that you're eligible for, we will show you those and explain those in more detail. And then it's at that point where you can either decide to submit those applications on your own, or you can upgrade to that Savi Essential membership, that is that premium membership, and we will take on all of the application and paperwork for you. So on the left-hand side here, you can see someone who, with the click of a button, is able to create 3 different PSLF forms for 3 different previous employers. Each of those need to get signed off by their employers and submitted to Mohila. We manage that entire process. And on the right-hand side here is an example of our sort of pre-filled digitized income-driven repayment plan application that, again, we will submit on your behalf to your servicer. And then we monitor those applications to ensure they achieve that desired outcome. So on the left here, you can see someone with 3 forgiveness applications in process for public service loan forgiveness, as well as their income-driven repayment application. And then we sort of zoom in here on the right, and this dashboard is going to show you exactly where you are in this process. What's been submitted on your behalf, what we might still need from you. One of the most frustrating things I find as a borrower is the lack of visibility and transparency that you have into this process on your servicer side. So we really help to provide you with that transparency and to make sure that you're aware of where you are in the process, what's to come. This also helps us hold servicers accountable. If we've submitted an application for you and it is past a certain time threshold before you've heard back, we're going to get on the phone with you and your servicer to follow up and make sure everything is going according to plan. And then last but not least, our customer support team. So you can consult and access our help center at any point in time, right there from your dashboard or from any screen on the Savi tool. Or if you are an essential member, you can send a message to our support team, request a phone call, again, right from your Savi account.